Pi Network has been controversial ever since it launched back in 2019. The prospect of being able to mine its Pi coin on a phone for free attracted tens of millions of users, who then had to complete KYC to actually claim it. The result is that Pi Network technically has the largest number of verified users of any crypto project. Naturally, this unique set of circumstances has everyone wondering how much potential the Pi coin has. And that's why today we're going to do a deep dive into Pi Network, including where it came from, how it works, how high Pi could go, and what's coming next for this crypto project. My name is Nick, and if you hold Pi coin, this is a video you can't afford to miss. If you ask who founded Pi Network, the first answer you'll get is Nicholas Kokalis and Cheng Diao Fan, both graduates of Stanford University. But if you dig a little deeper, you'll find that there are not two co-founders, but four, and these include Nicholas, Cheng Diao, Vincent McPhilip, and Aurelian Schultz, those last two also graduates of Stanford University. And if you go down the rabbit hole, you'll discover that Vincent sued Nicholas and Cheng Diao in 2020, alleging that he was unfairly fired. And this lawsuit was reportedly settled in 2023, and it's surprisingly hard to find information about it. And that might be because it revealed lots of sensitive details about Pi Network's operations. For the purposes of this video, the only detail that's important is that Pi Network raised at least $800,000 from investors between 2019 and 2020. Do note that it's not clear whether this raise involved Social Chain Inc., the Californian company behind Pi Network, or the Pi Network Company, the Cayman Islands company that presumably operates the Pi Foundation nonprofit. However, what is clear is that this important detail calls into question the claim that Pi Network never raised any money in an ICO, a claim that was made by Cheng Diao as recently as February this year. To be fair, it's possible that this claim is technically correct and that only shares were sold. And that's because Nicholas participated in a panel discussion about ICOs back in 2017, and he basically argued that selling shares is better than selling coins in an ICO. In any case, whereas Vincent left, or was fired, from Pi Network in 2020, Aurelian stayed on as one of its core developers. He notes himself as Pi Network's Director of Engineering on his LinkedIn, and he continues to contribute to its GitHub. He also seems to keep a very low profile. By now, it should be clear that Pi Network hasn't been very transparent, and that's putting it lightly. Funnily enough, the trend of opacity dates all the way back to the beginning of the project. Even though it was officially founded in March 2019, it has been building in stealth since at least September 2018. Not only that, but Pi Network hasn't posted nearly as many updates as you'd expect from a crypto project that's been around for so long and has supposedly seen so much adoption. For example, its X profile only has around 700 posts. This at least makes it easy to scroll all the way back in time to the project's early history using its social media profiles, which reveals even more opacity. Many of Pi Network's early updates appear to have been deleted, particularly those involving Vincent. Thankfully, we didn't find any major gaps in Pi Network's history, and its founders have been consistent about its origin story. In short, Nicholas and Vincent were both involved in blockchain initiatives at Stanford and realized that there was a need for onboarding users into crypto in an easy way and also being compliant. Pi Network was their solution to this problem. Nicholas revealed in an October 2022 interview that Pi's approach and design was inspired by Facebook. He noted that social media didn't gain traction until people started using their real identities on Facebook, and Nicholas wanted to make the same thing for crypto. And this is very important to note because it means that Pi Network is focused on the social aspects. In other words, it's a social finance or social fi crypto project. From our perspective, Pi Network is essentially a combination of Worldcoin and Notcoin that emerged long before people understood their incentives. For context, Worldcoin is another controversial crypto project which gives people WLD tokens for scanning their eyeballs using a somewhat dystopian orb, a bit like Pi Network's custom KYC. As for Notcoin, it's a crypto project which people could earn tokens for simply tapping on a screen, like Pi Network's mining process. Pi Network effectively combined both and added a user-friendly social media style app. The original app launched in March 2019 along with Pi mining. Pi coins became real when Pi Network's mainnet launched in December 2021, but it wasn't until February this year that these coins became tradable. And this long delay was supposedly a result of the team wanting to make absolutely sure that all recipients of Pi were genuine users, hence the KYC requirement to claim. According to the Pi Network website, over 14 million users have completed KYC. As noted in the introduction, this means that Pi Network technically has the highest number of verified users of any crypto project. As you'll soon see, this could become a massive selling point as the crypto industry evolves. All we want to see is more of you subscribe to the channel. Apparently, 34% of the people who watch these videos are not subscribed. Maybe there's something wrong with the counters. Either way, you may as well take a second to check that you are subscribed and ping the notification bell for good measure. Fire up those likes while you're at it as well. Back to the video. Now, let's look at how Pi Network works. And what's interesting is that Pi Network is practically a fork of Stellar. Now, to be exact, the Pi Network blockchain uses a modified version of the Stellar Consensus Protocol, or SCP, which involves using a network of trusted nodes and validators to process transactions. Pi Network can reportedly process up to 70,000 transactions per second, but this seems unlikely given that Stellar can only process a few thousand transactions per second. Then again, it's possible given that Pi Network appears to be extremely centralized, presumably for scalability purposes. According to the PiScan Explorer, the blockchain currently has just 28 nodes and just 3 validators. Notably, all 3 validator nodes are noted as being run by the core team. As a fun fact, this is probably why Pi has had a hard time listing on more exchanges. Exchanges will typically only list a crypto project once its blockchain has become quite decentralized, because otherwise it's just a centralized database. Regardless, the use of the Stellar Consensus Protocol means that there are technically no staking rewards at the blockchain level. Of course, there are mining rewards. Now, the base reward is currently 0.09 Pi per day, but can be boosted with things like referrals. The catch is that mining does not contribute to consensus unless you are running a node, at least according to the white paper. Per the white paper, the purpose of the mining is to confirm that a user is not a robot on a daily basis and to, quote, validate their presence. However, this only scratches the surface of the real purpose of Pi mining. Whereas the idea and design of Pi Network came from Vincent, the incentive behind Pi appear to have come from Cheng Diao, who is an anthropologist by trade, not a crypto geek per se. In a video from March 2020, Vincent and Cheng Diao revealed that they were closely watching how people would exchange Pi tokens in the app to see what people would be willing to exchange for Pi. And this suggests that Pi mining rewards are exactly that, an experiment to see what users are willing to exchange for Pi tokens. It turns out they're willing to exchange quite a lot, including their personal IDs and details. Speaking of which, in case you missed it, Pi Network uses its own KYC solution. In a March 2022 interview, Cheng Diao and Nicholas claimed that they had developed their own KYC solutions because third-party KYC processors couldn't handle the volume of users applying to do KYC. And this claim is questionable, given that KYC companies have had no issues doing KYC for hundreds of millions of users on exchanges. In our view, it's more likely that Pi Network developed its own KYC solution so that it could do things like sell detailed user data. And we say this because that's what Social Chain Inc.'s privacy policy for the mobile application and Pi browser seem to suggest. We'll leave a link to it down below for you to check out later. Quote, we do not share or sell the personal information that you provide us with other organizations without your express consent, except as described in this privacy policy. We disclose personal information to third parties under the following circumstances. Affiliates, we may disclose your personal information to our subsidiaries and corporate affiliates for purposes consistent with this privacy policy. Perhaps we're mistaken, but this means that Pi Network could be selling user data to third parties it's affiliated with. And this is evidenced by the fact that they have a Pi ad network campaign, wherein advertisers can use Pi to pay for ads that are shown in Pi Network's applications on its mobile app. And chances are that these ads are curated based on users' personal details, but we couldn't confirm this. On that note, according to the website, there are 70 apps on Pi Network and counting, and they include things like Pi's KYC solution. The most significant of these seems to be the Fireside Forum, a Twitter X-style social media platform launched by the Pi team in 2023 that serves as its main info hub. I should also note that all Pi developers must also complete KYC to build on the Pi network. As some of you may have heard, Pi Network recently announced the launch of Pi Network Ventures, which will invest 100 million in USD and Pi coins to incentivize the development of more apps on the network. What's strange is that the announcement notes, quote, Pi Network Ventures is established through the Pi Foundation, an ownerless organization. We are honestly not sure what that even means. The white paper specifies that the Pi Foundation is a non-profit, and you'll recall that we believe the legal entity behind the Pi Foundation could be the Pi Community Company, which is based in the Cayman Islands. We say this because many crypto projects have entities in the Cayman Islands that operate their non-profit organizations, and this is usually done to avoid regulatory scrutiny around token or coin issuance. Whatever the case, this relates to its tokenomics. Pi is the native cryptocurrency coin of the blockchain. It's used to pay for transaction fees, is used as a means of payment within Pi apps, and is also used to pay for things like ads within these apps. I'll quickly note that Nicholas did say in an April 2021 video that all transaction fees would be burned, but this doesn't seem to be the case right now. According to a blog post from April, Pi has a maximum supply of 100 billion, which was allocated as follows: 65% to mining, 20% to the team, 10% to the foundation, and 5% for liquidity. Regarding vesting, quote, each allocation mentioned above tracks the community-migrated mining rewards issuance pace, so the proportions of each allocation in the total supply remains the same at any given time. According to the official Pi Network Explorer, 7.2 billion Pi have been mined and migrated so far, and this works out to just over 10% of the 65 billion Pi allocated to mining. Logically, this means that the team and foundation, which is likely controlled by the team, have received 3 billion of their vested Pi. In case you didn't notice, this means that most of the circulating supply is controlled directly or indirectly by the team. And that's because even though 7.2 billion Pi coins have been mined and migrated, only 2 billion are currently unlocked. Meanwhile, over 3 billion Pi coins have been unlocked to the team and foundation, which is also likely controlled by the team. If our calculations are correct, then this could explain why Pi's price hasn't crashed more. After all, Pi was airdropped to tens of millions of people who have been waiting to sell for years. By all accounts, Pi's price should have gone straight to zero. As always, the devil is in the details. According to PiScan, exchanges hold just 300 million Pi coins, at least based on known wallet addresses. For reference, that's more than 20 times smaller than Pi's circulating supply. What this means is that there's low liquidity on exchanges relative to its market cap, and this makes it easier to pump or dump Pi's price. This means that it's possible, keyword possible, that Pi Network has been doing the same thing that many other large crypto projects do, and that's selling Pi coins OTC and using the proceeds to work with market makers to manipulate Pi's price. We only say this because it's something we've seen with many crypto projects, most recently with one whose price crashed by 90%. You'll know which one I'm talking about. Not surprisingly, many have alleged that the team is pumping and dumping Pi's price, and there is some on-chain evidence of this. And you can actually see transfers from Pi Foundation wallets to exchanges on PiScan. The good news is that these transfers haven't been very big. The bad news is that the low liquidity conditions I just explained means that even a small amount of selling can cause a big crash. And this begs a bigger question, and that's how big Picoin could get. In case it wasn't clear enough, the answer could ultimately depend on how much its price is being manipulated. If it's been heavily manipulated, then we could see Pi grow much larger than investors expect, just like we saw with other similar cryptos. From a purely technical perspective, Picoin could rally as high as $5. Now, this seems insane at first glance, as it would give it a market cap of over $30 billion and a fully diluted market cap of over $500 billion. But now that we've taken a closer look, though, the relatively low Pi liquidity on exchanges makes this possible. And if you're thinking of buying, selling, or trading Picoin, then you have to check out our article on it over here. Not only will we tell you exactly how to do it, but also get you some of the best deals in crypto on Tier 1 exchanges. These deals won't be around for long, so take advantage of them ASAP using the link down below or the QR code right over here. Now, whether Pi could rally to these levels fundamentally depends on its upcoming milestones, as these are likely to trigger pumps just like what we saw after Nicholas's recent appearance at the Consensus event in Toronto. And that reminds me, the panel discussions Nicholas participated in was about AI, and he pitched Pi Network as a solution to an emerging problem, and that's that more and more crypto users are actually just bots. Be that as it may, Pi's roadmap can be found on its website. It contains dozens of milestones about everything from its app to its community. This video is already getting lengthy, so we'll focus on the most important ones, and we'll leave a link to the roadmap in the description if you want to come back and read the full list later. For mining, the most important milestone is making it possible for users, also known as pioneers, to migrate more of their Pi coins to the mainnet. Any pioneers in the crowd will know that it's so far been a pain to migrate coins to the mainnet, and that there have been lots of complexities related to lockups. Before you ask, we don't have the time to get into these details here, but may do so in a future video. Let us know down in the comments below if you would like to see that video. For apps, the most important milestone is making it possible to convert Fireside tokens to Pi coins. Now, besides the fact that this could mean more Pi coins for pioneers, it could also mean more Pi coins for the team and their affiliates. Take a second to consider that they're some of the most active on Fireside. For developers, the most important milestones are improving the developer onboarding experience and also improving the development experience itself. I should note that some of these milestones have technically been met in recent months. It's hard to know though, as the roadmap doesn't seem to be up to date. To add insult to injury, the Pi team continues to post infrequent updates despite having launched the Pi coin. And some would say that now is time for the Pi team to be attentive to its community and answer all the questions they have about the Pi coin migration. The fact that secondary sources have garnered millions of views is evidence that the team has done a very poor job at communicating. And that's the problem. And this brings me to the challenges that we foresee for Pi Network. And the first is the big one, and that's a lack of transparency or communication. Take the Pi Foundation, for instance, a quote, ownerless organization that emerges out of the blue to launch a $100 million venture fund consisting of US dollars and Pi coins. This is pretty damn suspicious, even by crypto standards. And this highlights the fact that most opaque parts of the Pi network all involve money. Who originally invested in the project back in 2019 and 2020? Did they just purchase shares, or were there also tokens involved? Were there any subsequent fundraising rounds? And is the Pi team raising funds now by selling Pi coins OTC? These are just a few of the many questions that the Pi team will need to answer in full if it wants to be seen as a legitimate crypto project by the broader crypto community. To be clear, this is not something that's unique to the Pi network. Most crypto projects fall short on transparency, but Pi network is one of the most extreme examples in this regard. Fortunately, this is something that can easily be addressed through communication. Unfortunately, this won't help addressing Pi network's second challenge, and that's tokenomics. It doesn't take an economist to see that the Pi coin has a supply and demand imbalance. There's a huge supply sitting with the team and pioneers that's waiting to be sold, and not many people are buying. Again, improving transparency and communication would go a long way towards bringing in buyers. Even then, though, it faces a peculiar problem, and that's that the Pi coin is being used to incentivize people to do things in the app, namely mining. Pioneers have learned the hard way that earned Pi and available Pi are two very different things. Unless the Pi is available to sell, it's not worth anything as far as users are concerned. But if too much is available to sell, it could crash the price. And that's likely why the Pi team has been engaging in not-so-subtle supply manipulation by adjusting the conditions for Pi migration. Raising those requirements results in less available Pi, while lowering them results in more available Pi. Come to think of it, if the Pi team is manipulating the price, this could be to incentivize pioneers to keep using the app by making them think, if I just wait a little longer, I'll be rich. And this pertains to Pi Network's third challenge, and that's its broader appeal, particularly among institutions. In theory, Pi Network has a powerful selling point. We have over 14 million KYC'd users, and this means that advertisers can be sure that their ads are being seen by real people. It also opens the door to things that aren't currently possible on other blockchains, like issuing regulated assets on Pi Network. In practice, however, this selling point assumes that Pi Network's KYC process is as legitimate as it claims to be. In other words, it assumes that institutions will see Pi Network's KYC as legitimate compared to other existing solutions. We believe it's possible, keyword again, possible, that Pi Network's KYC solution isn't as airtight as it needs to be, and that there could be some leakage, like, say, millions of fake KYC'd accounts. What's wild is that this kind of leakage would be preferable to the other kind, like millions of legitimate KYC'd accounts being leaked, which allegedly happened back in 2021. The caveat is that this only affected 10,000 Vietnamese users who had used a third-party KYC solution for Pi Network. Even so, when you combine the possibility that the number of verified users on Pi Network is inflated with the fact that most pioneers only log on to mine Pi and see if they can unlock all their locked Pi, it's easy to see how institutions would steer clear of Pi Network, especially since they also need to complete Pi Network's KYC to participate. And this could be yet another reason why more exchanges won't list Pi. With all that said, though, it's not that hard to see why many believe that Pi Network has potential. As I mentioned at the start of the video, Pi Network is literally a combination of Worldcoin and Notcoin. The only difference is that it's much less transparent and emerged earlier than both of these other crypto projects. The irony is that neither Worldcoin nor Notcoin are seen as particularly alluring bets to the broader crypto community. Given this fact, we reckon it's fair to say that even if Pi Network improves its transparency and communication, the Pi coin will still have limited potential compared to other crypto projects. The only exception is if you are mining Pi, in which case it's free money. Then again, when something is free, it usually means that you're the product, and that's sobering to consider given Pi Network's KYC requirement. Anyways, if you want to learn more about Worldcoin or Notcoin, then you can watch our video on that right over here. And if you're not subscribed to the channel yet, you can do that right over here. This is Nick signing off. Thank you very much for watching, and I'll see you guys again soon.